Welcome to CEO Connect, presented by CU Solutions Group. On this month's episode, we'll discuss strategies to promote the credit union movement through strong cooperative marketing.
The Credit Union National Association recently announced that they intend to raise $100 million over a 3-year period to fund and maintain a research-driven credit union awareness campaign that has been initially dubbed as the Open Your Eyes to a Credit Union campaign. I say bravo. This couldn't come at a better time as bankers, through their associations, are yet again ramping up their anti-credit union rhetoric, focusing on the credit union tax-exempt status. Apparently, their recent legislative defeats in Washington, D.C. and in Iowa have left them feeling irrelevant with their member banks. So they're now turning to making noise with the media so that they can project to their member banks that even though they're losing on the policy front, they really are trying to beat down credit unions, their competition. Wait, haven't we seen this tactic before? In fact, in June of 2004, Michelle Heller wrote an excellent opinion piece in the American Banker titled, "A Battle Banks Can't Win But Keep Fighting," in which she called it the, quote, dirty little secret of bank lobbying. That is, that their credit union bashing is a waste of time, and that fighting the credit union tax exemption is a battle that bankers know they can't win, but they know they must fight. So in a very recent Wall Street Journal opinion piece on August 15th, the Florida Bankers Association CEO Alex Sanchez opined that, quote, credit unions shouldn't get a free ride, close quote. It would seem that the author lacks a bit of credibility on this subject given his title as CEO of the Florida Bankers Association. But in his opinion piece, this is just the latest example of bankers taking to the airwaves now that they have again lost the public policy battle in the aftermath of the very significant tax reform package that was passed by Congress and signed into law by President Trump. Perhaps the bankers should open their eyes to the realities of why credit unions are growing so fast and getting so large. It's because people like credit unions more than they like banks, period. The tax status isn't the bankers' biggest problem. Their image and level of service are the real culprit. And I seriously doubt that the public, which includes the Wall Street Journal readership, by the way, will be sympathetic to the behemoth banking industry's call for the taxation and destruction of credit unions. Tax policy is tied to corporate structure, not services or marketing tactics. Lawmakers thankfully understand this. That is why some 2,500 banking institutions with fewer than 100 shareholders essentially pay no corporate taxes because they have opted for the subchapter S tax structure. This sub-S status eliminates the double taxation of a C corporation by passing earnings on to individual shareholders to be taxed at the personal tax rates of the shareholders. Bank lobbyists successfully lobbied for this structure option as recently as 1996, even as they were fighting against the credit union tax exemption and seeking to limit access to credit unions through the federal lawsuit against the NCUA. The infamous H.R. 1151 Credit Union Membership Access Act overturned that Supreme Court decision that severely limited access to credit unions. The legal action was, of course, initiated by the banking industry, and Congress saw fit to correct that problem because they understood on both sides of the aisle that the public needs credit unions and what they have to offer. Federal and state lawmakers in Washington and in state capitals have opened their eyes to the benefits of credit unions time and time again. They realize that any foregone federal tax revenues are more than offset by the financial benefits to middle-class households and small businesses in our economy. This is especially true for those consumers and small businesses who are financially challenged and need access to fairly priced and trusted financial services. So the credit union tax exemption is good public policy, period. And as we always say, if banks think the playing field isn't level, they can give up their C Corp stock structure, their executive stock ownership, and the insider enrichment that comes with it, and opt instead for the credit union model where earnings cannot be distributed to outside shareholders. The benefits of the bank's stock structure flow right back to the boardroom and the corner executive office suite. Of course, bankers will never, quote, level their playing field by opting for the credit union tax exempt structure. for that one reason that has to do with the ability to benefit from the earnings of the corporation. So bankers, I say, open your eyes. Open your eyes to why credit unions exist and why consumers and small businesses are joining credit unions in record numbers. It's because they love credit unions and they trust them more than they do banks. The banking industry can fix this, of course. Many years ago, the Get a Mac campaign was a television advertising campaign created for Apple by the company's advertising agency, TBWA. It ran from 2006 to 2009, and that campaign reminds me of the problem faced by banks today. Credit unions are just cooler and more attractive than banks. I always hear people say to me that they love their credit union. When is the last time that you've heard someone say that about their bank? In the case of the Mac, many people just like the functionality and the user-friendliness better than they do a PC. Look at how Apple has done the same with products like the iPod, iPhone, iPad, iTunes, and so many other Apple products. Bankers could learn from this. Improve your products and services and stop carping about your competition, and in this case, credit unions and their tax-exempt status. The Get a Mac advertisements in the campaign became easily recognizable because each ad followed a standard, simple template. Against a minimalist, all-white background, a man dressed in casual clothes introduced himself as a Mac. Hello, I'm a Mac. While a man in a more formal suit and tie combination introduced himself as a Windows personal computer, and I'm a PC. The two then acted out a brief vignette in which the capabilities and attributes of Mac and PC were compared, with PC characterized as formal and somewhat polite, though uninteresting and overly concerned with work, often being frustrated by the more laid-back Mac's abilities. The ads were playful and funny, but also aggressively competitive. However, they managed not only to make Apple the good guy. The kind-hearted Mac was always telling sad sack PC not to be so hard on himself, but also got people to pay attention and care about the boring part of computing. Security, viruses, rebooting, and even syntax errors became water cooler conversations. That good-natured humor, along with the fact that competitive ads were easier if you're the, quote, little guy, worked to Apple's advantage. It galvanized Mac loyalists with pride and inspired the PC user to take action in regard to their PC woes. Now back then, Apple was the David swatting at the Goliath PC industry. Of course, Apple's good fortunes since then have become legendary. There are amazing parallels, in my opinion, that can be drawn in the credit union versus bank messaging that we're in the midst of as bankers once again ramp up their public relations campaigns against credit unions. I hope our industry exploits these differences with a well-coordinated Open Your Eyes campaign led by CUNA and state leagues. Credit unions, of course, are the little guys taking on the Goliath banking industry. Our growing number of billion-dollar credit unions that were referenced in that Wall Street Journal opinion piece are taking on the growing number of trillion-dollar banks, and they're doing it along with much smaller credit unions who are better liked by their members and more trusted by them than are banks with their bank customers. Today, there are 5 U.S. banks, 5, with over $1 trillion in assets. That number is essentially the total assets of all U.S. credit unions. And Chase, the U.S.'s largest bank, has nearly $3 trillion in assets, or 3 times the size of the entire credit union industry. The CUNA Open Your Eyes campaign will help contrast credit unions in ways very similar to the Mac versus PC ads that ran some 10 years ago with such great success. And hopefully the research-based campaign and creative will spawn scores of state and local campaigns where the funding and advertising spend are all localized. This will assure buy-in by credit unions and a greater likelihood of long-term funding success. In my opinion, state and national credit union associations have 4 fundamental roles: advocacy, awareness, solutions that help credit unions be successful, that include education offerings, and compliance. Of course, at the very core, associations exist to help credit unions do things together that they can't do as effectively on their own. So of course, lobbying and the promoting of the industry should be at the top of the list of things that credit unions can do more effectively, cooperatively. But the fact is, those two roles are intertwined because advocacy is a lot easier and more effective if those being lobbied understand the credit union difference. So CUNA and its state league partners are collaborating on how best to execute this bold vision by CUNA. Led by CUNA's Chief Strategic Communication Officer, Douglas Kiker, this campaign, in my opinion, will surely be a success with the support and engagement of credit unions. Douglas is a great thinker and collaborator as he works with different constituencies in the industry to formulate vision and strategy by listening to all, processing input, and then pivoting to the best execution plan. Now, throughout my 30-year career as a state credit union association leader in Utah, Washington State, and now in Michigan, I have always made cooperative awareness campaigns a pillar of our state league efforts with varying levels of success. Here in Michigan, for decades now, our credit unions have supported a multi-million-dollar campaign called the CU Link campaign that currently uses the theme, "There's real strength in our numbers." We're in the process of seeing how we can align this state campaign in Michigan with the CUNA Open Your Eyes messaging as soon as next year. I suggest the following 5 principles that CUNA and credit unions should consider when implementing this Open Your Eyes campaign. Number 1, research. Make the campaign messaging and success metrics research-driven. CUNA has done this, and so have we in Michigan in coordination with CUNA. Consumer perceptions vary from market to market, and these differences need to be considered. In Michigan, for instance, perceptions of membership eligibility are not really an issue. They're pretty strong and positive, unlike what the research shows nationally. But our market does share the other research-driven myths that credit unions are not as convenient and perhaps not as mobile-enabled. Second point, stay local. In addition to the need for local messaging differences, a cooperative awareness campaign will be well-funded and sustainable if credit unions know that the ads will show up in their media markets. A successful campaign should assure that fundraising and spend are localized, but by employing contemporary media mix strategies. Digital, online advertising, social media, and music streaming ads can all be localized just as with cable, radio, billboard, and other more traditional media types. Incentives for tie-ins to credit unions' own advertising can also be accomplished in order to leverage the cooperative campaign through individual credit union advertising. Point 3, message properly. Changing the master theme every few years is okay, but it should allow for the important sub-themes. Open Your Eyes is a great theme today, and it may endure for a number of years. But when it changes in a few years, it's the research-based sub-messages that really matter. Convenience, mobility, alignment with life decisions, trust, and value are just a few examples of why people should open their eyes to a credit union. Point number 4, know the audiences. Realize that the target audiences include existing members, credit union leaders, and policymakers, not just potential members. This ties directly to broader advocacy efforts. Awareness is directly linked to advocacy for associations. When lawmakers and staffers and community leaders hear and see our ads, it will help them understand that the credit union difference and tax status benefits their constituents, and it needs to be preserved. Similarly, share of wallet with existing members is enhanced through cooperative advertising. Savvy credit union marketers know that expanding the relationship and service usage with existing members is easier and more important than onboarding new members. And, like it or not, if credit union leaders and staff don't see and hear the ads in their markets and on their computer screens, they will be less likely to continue funding the campaign. That's just a reality. Point number 5, keep it voluntary. Resist the temptation to make participation mandatory through dues assessments. This works in some cases, making it mandatory, but in many, many cases, we've seen that as state campaigns have made participation in cooperative advertising mandatory, it has caused the campaign to fail because it makes it more difficult to participate when tough economic times return. And a good cooperative campaign can stand on its own merits. And like with all cooperative endeavors, whether PAC giving or grassroots lobbying, Not all credit unions or state leagues have to participate to make this national awareness campaign a success. Success is defined by incremental gains, market by market, year over year. That's how it always works in our credit union industry. Great ideas spread and success grows. If the value proposition and execution are right, credit unions will engage and drive success voluntarily. A hallmark of our movement is the cooperation through united association efforts, especially in areas of advocacy and communication with the public. Now, CU Solutions Group is a national CUSO that provides services to credit unions in areas of technology, marketing, and HR performance solutions. Specific to marketing, CUSG works with a progressive marketing company called Focus IQ to assist credit unions with their marketing and branding. In Michigan, the Michigan Credit Union League's CU Link awareness campaign is driven by Focus IQ in cooperation with CUSG. They help with the research, creative, and media buy execution, as well as integration campaigns with individual credit unions. They understand the 5 principles that I mentioned and have helped the Michigan credit union community achieve success metrics like 51% population penetration, and a market share of consumer household deposits of nearly 20%. Most important, when we poll Michigan consumers, they are twice as likely as bank customers to say that they would refer their credit union to a friend or family member. Likewise, they are roughly twice as likely as bank customers to say that they trust the credit union is looking out for their financial well-being. That's incredibly powerful data, and it is in part driven by Michigan's multi-decade, well-funded and sustainable cooperative awareness campaign. So as the war of words ramps up yet again between banks and credit unions, our credit union community needs to support the CUNA vision for helping everyone to open their eyes to a credit union. This means not just the credit union value proposition, but also the reasons for the credit union tax-exempt status. And the public messaging helps strengthen our lobbying communication strategies. Sadly, the bankers will continue to fight a battle that they can't win to eliminate the credit union tax-exempt status. But this will only be true if we, as advocates for the credit union model, support the right mix of lobbying and communication strategies so that what is right for people and our economy can triumph over the self-serving money interests of the banking industry.